And that means we are now live here on our YouTube channel. It's our daily halftime report, our stock market show where we go through the markets one step at a time, looking at the charts, breaking down the news, giving you the economic data, anything that's relevant, important that we find interesting, give it some analysis and give you some insights so you can better run your daily routine. Welcome out to Tuesday's show, 3/23/2021, second trading day of the week. And we've got a fun one planned for you. We got Coach Mark here to provide analysis as always. Coach Matt is here just for a couple minutes. We got you to kind of talk big picture. And then Coach Emily is here as well. Obviously, we welcome the Queen back on her regular Tuesday appearance. I'm going to start with you, Emily. How are you doing today?
I am doing wonderful. Tim, how are you?
Doing fantastic, actually. You know, markets are mixed here this morning. Obviously, we got some news to kind of churn through, but in general, I mean, things are doing great. The weather is turning. It is now spring, Emily. So how could I ever complain about that? Getting out of these cold winter months, right?
Absolutely. Cannot complain about that. Sun is shining. Everything is wonderful.
Yeah. Mark, how are you today, sir?
I'm doing great. I have a Queen's Court pick for later in the show,
good
which
gracious.
I'm sure I will get my head cut off, but I'm excited about that one. I've never been more excited to die.
I don't know if you will. You didn't tell me what the pick was, but you kind of hinted at it. I mean, the Queen might accept your offering here today.
My pick is going to be highlighted on Mad Money tonight by Jim Cramer. Kathy Wood is the largest shareholder. I'm excited to die because I'm still going to die.
All right, so Kathy Wood, Jim Cramer, we're ready to roll. Okay.
Yes. Matt, how you doing today, sir?
Doing good. Excited to be here with the crew and excited about our latest thing at Tackle Trading as well. Tim, we got, as many in our community know, we've been working on the back end to get the audio for the Huddle, our daily market commentary product for our community. And Tim, yeah, I'm very excited to announce that first episode is in the books and is posted, is live and ready for our community. So, guys, the Huddle is a daily market commentary podcast that allows you to get
Emily,
to understand
real
top.
Quick,
yeah, let's
Emily,
go over to Tackle Trading
page.
and bring over to the Huddle.
Let's promote this properly, my Queen.
I'm bringing it up for you.
All right.
And I just love the Huddle because it allows our community to truly get the top 5 storylines of the day, high level, quick, on the go. They can get the audio version through the podcast or any podcasting app. They can get the write-up obviously over there at the website. And I'm really excited about the Huddle. It's the Christian's design was absolutely impeccable as always. Yeah, I love the write-up and now we got the audio out there. So definitely start your day with the Huddle and then come over to the halftime report to get the color commentary about these stories. So I'm excited. I'm excited for the community, and I think it's going to be a really, really, really good thing to a lot of people are very busy these days, right? On the go, stay on top of the market. It's a beautiful thing. Excited for the community.
Yeah, absolutely. And if you're out there, hashtag Team Tackle as you're coming in here. I saw a lot of our regulars coming in and starting the conversation already. It's always encouraged and always exciting to see. It's one of my favorite parts of the day. Guys, this is something that we're proud of. We're excited about. We're going to be putting it out on a daily basis. You can get the Huddle podcast while you're driving. Make sure you get it to download right onto your favorite podcasting app, but also the write-ups, right here directly on the website. So you go to tackletrading.com. The Huddle podcast will be right at the top of the homepage. You can click it. It will open a new tab. If you have Emily's design behind her Google Chrome, it'll be a wonderful Christmas themed tab, red and green up there. No, it'll open a new tab and then you can scroll through all of the content. You can find the direct link to the Apple podcast right up there on the top and read those top 5 stories that we curate and that we write each and every day. So very, very excited about it. Emily, I mean, this is going to be a time saver for people, don't you think?
Oh, yeah. I wish I had this when I was getting started. This would have saved me a lot of time.
Yeah. And I know Mark likes things simple, direct, quick, efficient, so he can get to his trading and making money. Marky, the Huddle podcast, I think for a beginner out there, pretty valuable, a little bit of resource, don't you think?
Oh no, absolutely. Listen, it's all about efficiency in trading, right? Because you got your life, you have your family, you have your relationships, you got your hobbies, you got your job, whatever, all of these things. But you want to do the best you can in making decisions with your trading. And so, it's like why the scouting reports are so wonderful. It's why the halftime show is both hopefully entertaining and informative to help you huddle just one of those products to help you on the go, help you out.
Yep, absolutely. Well, I'm excited about it. I'm putting a lot, of effort into this as well. I know Matt is. We're all on the back end working hard to get you guys this content. We would love you to support it. So if you could go out and subscribe to that huddle, get the word out, help us get the word out on this new product. It'd be fantastic for our community. Yeah, absolutely. Let's get down to market, review and analysis and whatnot. Let's get down to it. Marky, obviously we got a little doji on the S&P 500. That doesn't tell the whole story in the market today. As crude oil selling off, there's a little bit more going on. But from a broad-based perspective, as I look at the heat map, as I consider what's happening in the market the last couple of days, we're in front of a testimony on the Hill, with Janet Yellen and Jerome Powell that are going to be talking about what's going on with the marketplace. But here we are, markets are dojing. What are you seeing here in the market conditions?
Listen, it isn't the easiest market to navigate. Hasn't been for a little while now. For a little while now. I mean, we got a lot of competing storylines going at it. We got a lot of narratives going at it. We got a lot of uncertainty going at it. How much should I be invested? Where should I be invested? The reopening play is pulling back. Tech's going up. What should I do? It is a very difficult market. And so the price action on the S&P doesn't even come close to telling the story about what is going on in the market right now. It's not like obviously fearful, right? It's not obviously people aren't panicking like they were a few weeks ago, but it's very, very, very choppy right now. It's very choppy and different areas, and I've been talking about this for a little while, how it seems like yield, that 10-year, what it does. Well, tell me what it does tomorrow, and I'll tell you which group goes up tomorrow. Does the yield jump? Well, tech's going to underperform. Does the yield fall more? Well, tech's going to overperform. It's been that way for a while now, and until I see some evidence of that breaking, that is, that's probably going to be with us, and that's can be a little bit frustrating too, because hey, let me go jump into tech right now. What happens if the yield spikes in the next 2 weeks? I mean, it's difficult to navigate from that standpoint. Now, some of the big themes I still believe in strongly, and so from a position trading, from an investing standpoint, it's not impacting my decision making. But from a short-term navigation, if all you do is short-term trades, it's a little choppy out there right now.
Yeah, it is choppy. And obviously, give me the ZN contract there for a second, Emily. And I do want to have a short conversation about this because the little playbook that computer algorithms seem to be running right now, Mark, is very simple. Yields down, tech back up. Yields up, tech back down. And you're getting that rotation within sectors. Now, when you look at the broad markets, like from the S&P 500 perspective, where it has every sector built in there, that's why you're getting kind of light price action up at the top. That even as one sector's down, the other ones are holding it up. So broad market performance is kind of holding up near the all-time highs. Now, the yields are up 2 days in a row to start the week, which is why tech has been an outperformer here for 2 days in a row to start the week. As bond prices go up, yields go down. But Mark, at some point, don't you think this will have to disconnect from this? Because as yields move towards 2% over time, it's not like tech is just going to sell consistently on that. But right now, that is capturing, and that is part of that playbook that I think Wall Street is running right now. How do you approach that? Do you just let Wall Street play it out?
The
Do you
thing
wait
about
until
it
it changes?
And this is what, and I've talked a little bit about this, and I really am basing my decisions on this. Eventually it ends, right? We've had a couple, and to understand, computers and algos, how high frequency trading makes up 50% of the trading in the market. 50% of your volume is high frequency trading. And so when we say algos dictate, they kind of do. And a lot of individuals in the short term price action. And we've seen a couple algo programs over the last year that just lasted months and months and months. And the one I keep referencing in my head is the one that we had last summer when you had reopening virus news. And it seemed like when you had bad virus news, techs outperformed. When you had good virus news and the fact of something reopening or making progress, tech underperformed. Now, we had a lot of bad virus news last summer, right? And what did tech do during that stretch? had a very monster stretch. Now, the cumulative effect of it all was lifting prices. And so tech would go up, other company value go down, value would go up, tech would go down, but the cumulative effect over the months and months and months was continually lifting prices. As long as the 10-year doesn't spike massively in a short amount of time, Jay Powell references this as like as long as rates go up orderly. You know, if there's massive spikes, you're going to have a big tech sell-off day on that day, kind of like you saw a couple weeks ago. But as long as rates go up orderly in the short term, I think what you're going to see is, like you did last summer, the cumulative effect of prices grinding higher. Now, it's going to be very choppy. It's going to be very choppy. I don't expect like the monster run like we had last year. But that cumulative effect should at least provide, at a minimum, some kind of trading range on the broad markets with pockets of entry. I think timing is going to be very important for your trades, being very greedy on your timing. Like for example, let's pull up Jets right now to give you a sense of what I'm talking about. Now, Jets, part of that reopening play, has had a monster 4 months, right? Ever since the Pfizer vaccine came out, the result is what? From that 28 to the high of 18 to the high of 28, you know, that's a nice, 55% climb. That's a good run, right? Now, along the way, it hasn't been exactly pretty. But finding those timing entries to enter, because I ask you, do you think that we're going to go into some kind of massive lockdown and society is going to shut down again, Emily and Tim?
No, I don't believe
No,
that.
I don't think so.
Even with fears and restrictions, they might kind of curb some short-term stuff, right? You know, in terms of curfews and those type of things. But I don't see that. No.
All right, and so like eventually, people are going to get exciting for the reopening trade again, right? Eventually they are, and we'll talk about COVID headlines here in a second. So what it really is going to come down to is on, especially from a longer term position trading, but even swing trading, timing is going to be really important. A read on technical analysis is going to be really important. Waiting for, and Matt did a great job yesterday talking about those classic retracements forming. I really do believe reopening plays getting hammered the last few days. Rotation trades not doing great right now. But I keep, when I do my own analysis over the weekend and when I do my own analysis each day, each night, I ask do you think rates, do you think that 10-year is not going to climb again this year?
I believe rates are going to continue to go up. I think they're going to continue to move towards 2%.
Do you think that we're going to continue to make progress towards a full reopening this year?
I do, yeah.
Emily?
I do too.
All right. So these are the mega themes that drive my decision making. Now, that doesn't mean I go in and buy blindly. Pull up Carnival Cruise Line. So we got Jets, we got Carnival Cruise Line, some of these reopening plays. And pull up Carnival. Once again, kind of all these plays kind of have the same price action last few days. It's almost like they're all getting simultaneously sold, you know. But at some point, we're going to get excited again. At some point, rates are going to go up. At some point, infrastructure spending is going to trigger industrials, or at least the rumors of an infrastructure bill. We'll talk about that more here in a second. But we don't buy blindly. We have our mega themes that we believe in for the coming 6 months, 9 months, 12 months. And then we look for opportunities. And those opportunities will manifest themselves when we get technical retracement signals on charts. It's the whole buy the dip thing that infuriates, I think, all of us. Well, buy the dip. Well, a dip, we believe in that concept, but we call that a retracement. We identify that dip with a technical pattern. And I think waiting for those technical patterns, pull up XLI, industrials, like all of the rotation, all the reopening stinks the last couple of days. Some of it not as bloody as others, but you've had a pullback in all of these areas. And I really think, and I don't know when it will manifest itself, end of this week, next week, 2 weeks from now, but you're going to get a technical pattern that tells you that the sell-off is abating, and then you're going to get technical signals saying upward movement on the horizon. You're going to want to jump on that.
Mhm. Yeah, obviously, these deeper retracements that are happening in energy is different than this shallow retracement little flag pattern happening in industrials, but the theme is all kind of moving together. And I appreciate the insight and the analysis on that, Mark. And you're right. You don't just buy on a red candle because it's a red candle. You need to understand technical entry points, technical analysis, and how to get confirmation, technical confirmation as to when you should actually be playing that. And if you've not ever gone through a course that teaches you that kind of stuff, I mean, put the time in, put the seat time in. The step system course is fantastic for any trader to learn how to do that technical analysis, with confirmation, with entry points, with targets, with stops. So, all right. So we're not just buying the sell-off until we get some stability. But let's go back on the broad markets here, because that's what's happening in pockets of the market. You still have some areas that are holding up really well here today. Technology, like you said, Mark, there may be some opportunities developing in tech. Give me the NQ contract. And Emily, tell me what you're seeing in the chart, just from the NQ on its own, and then we'll go through the rut. I know your poor rut is on a pullback.
Oh, I know.
We'll get there. We'll get there. Give me a read on this NQ though, Emily. What are you seeing?
Well, NQ is holding up a lot better than my poor rut. Obviously, it's kind of like just been consolidating here. Obviously, we wanted to see it break out of this resistance level that it was holding last week. Nice green candle yesterday. It's got a little bit of follow through here. I'd like to see it break, that 13,100 and, maybe even this pivot point right here for potential entry. But, it's doing a lot better than the other industries are. And we talked about this last week. We talked about the tech sector being one of those plays that are making a comeback after really taking a huge beat down the last few weeks. So still a space I'm interested in, still a space I'm looking at, not, trigger happy as I would have been last week, when we were trying to break out of this zone right here, but still looking for some potential entries in the tech sector. But still overall, cash flow is just the kind of thing to do at this time. Swing trading has kind of been difficult the last few weeks, but position trading and, long-term investing, doing those, covered calls, selling puts and stuff like that is still been working very well.
Mm-hmm.
I mean, cash flow. I mean, you have two cash flow investors here with Emily and I. Cash flow hasn't been not bad, and it certainly has mitigated bleeding in a certain area. It's just, there are some environments, and I know, sometimes you roll your eyes, Tim, when I'm like, it's a good cash flow environment and a nice uptrend. Man, this has been it's not been a great cash flow. It hasn't been a great cash flow environment. It has been a necessary cash flow environment, I believe, over the last month or so.
Mm-hmm. Give me the intraday chart though. And I listen, I mean, cash flow is cash flow is cash flow. And I love the way that you guys approach your trading systems with that. And Emily, you've taken years to develop those systems. You have as well, Mark. So obviously taking advantage of neutrality and volatility, that is the reason why you guys choose theta. But I think there is a directional opportunity shaping up here at some point, potentially down the road. It's not happening today. We're still a ways away from it. Emily, we've got a couple of intraday resistance levels. One of them that I'm seeing about 13,035, from a couple of weeks ago. There's this other one here about 13,003. We're getting pivot points in here. Can you zoom that out just a hair, maybe an hourly chart instead of the 30, so I can capture about a month of activity? Or even that 4 hour. You can see it on the 4 hour as well, either way. Here. Now, Mark, those are classic reversal price action type of patterns. Now, it's in a choppy, volatile way. We're not out of the woods yet. The daily chart is still messy until we clear this. But if tech does clear this, do you think it could shape up for a short-term trade in the tech sector?
I do not, and I'll tell you why. Until I see one thing, I have to see a day, and I'm looking at you, Apple and Microsoft and Amazon and Facebook and Google, the blue chips, because if the blue chips perform this way, then the rest of the fun party people will follow. I need to see a day where the rates jump and big cap tech doesn't sell off. I haven't seen that in weeks and weeks and weeks. And so any trade for me is, well, you might get a technical signal. What happens with rates the next day? With zero evidence over the last month on a rate jump day on big tech not selling off, it could easily blow up any short-term trade. Now, if we start to see that evidence, and once again, I'm not as concerned with the other tech as how those big cap tech perform, because I think that is where the longer term opportunity lies.
Mm-hmm.
Rates can go up over the next 3 years. Apple's still going to be a great company. Microsoft's going to be a great company. They're going to manage their things. They're going to make a lot of money. You know, so I'm just talking short term. I think there's some real good long-term opportunities in big cap tech. Other technology companies that are debt burdened, interest rates are going to just hurt them bad. But I have to see, for me personally, and everyone else can do, you can all do what you want, but I got to see that rates go up and tech doesn't sell off, because some of those tech sell-off days we've had have blown up short-term trades on those rates going up. I mean, all I have to do is go back to last Thursday. So it's not like I have to go back. We had a big jump in the 10-year and tech got obliterated. I have to see that that's not present before I personally am interested in short-term trades. Now, long-term, I think eventually the big cap companies separate from that program. And so what you do with those short-term, because I know a lot of people hold Apple, a lot of people hold Microsoft, a lot of people hold Amazon. They're going to be fine long-term. But short-term trades, man, I got to see that program disengage from rates before I get interested.
Sure. You know, and I understand that caution. There's no question about it. And tech's not out of the way. It's not like we're sailing today and breaking out of resistance. So it's not even the discussion for today necessarily. Just kind of
you don't have a hard decision today.
No. You don't have that tough call today. But I would not fault the technical trader for taking a breakout. You know, I'm guessing a Coach Frank or a Coach Tyler would say, Mark, I understand what you're saying, but I trust the chart and I'm going to watch that chart. And if it does break, you do have some potential there in that opinion. But if it's caution you want to choose until you see that disconnect from the interest rate theme, I do understand that.
And the one last thing on that, I am not an advocate of tight stops ever. I don't trade tight stops on my trades. I oftentimes, cost average down. I don't have stops on a lot of the long-term positions I have. If I did a tech trade, I would have a tight stop. I think the risk reward, it makes sense in this environment that if you did a tech trade, short-term directional, I would have a tight stop on that.
Mm-hmm. I gotcha. Emily, let's flash through the indexes here if we can. The other ones we haven't looked at. I know you peeked at the rut. I had to take a look at it. It was down the most. The reopening theme, dominated by a lot of energy and, financial type of companies. Russell 2000 is composed of many of those industries and sectors, Mark, based on market capitalization. It's on a deeper pullback into the 50-period moving average. You don't get that very often in the rut, but you have a subtle momentum kind of shift here, just a little bit, but you still have to acknowledge the higher high, higher low pivot relationships that are in there. Emily, what are you seeing in this bullish retracement?
Well, after the rut had this huge movement, and this is not, obviously what we expect out of small caps, but it's had its run. So anybody should expect that at some point this run is going to come to a slowdown, which is what we're seeing. You can see here, even with the higher lows, and the expansions are getting smaller and smaller as it continues to inch higher. This pullback is a little bit deeper, but it's the same pullback we had here. So I'm looking to see if it's going to find support here at the 50 and bounce off of that and continue an uptrend. So it's just something that I'm keeping an eye on. If you're, a cash flow condor trader, obviously, if you've got your eye on condor on, you've got your levels you're watching, and so on and so forth. But this is it's just a pullback. It's a little bit deeper than you would want, but it's at the 50. So if it holds the 50, I'm still bullish on the small caps.
It's a pretty good sell-off today, down 1 point. What are we now? 1.8%, 1.9%?
Yeah, 1.6%.
1.6%. But Mark, a retracement, you probably needed it. I mean, the trajectory we were on, obviously, it was not going to be sustainable. What are we going to do? Go to $3,000 by the end of May? So you're going to have some chop back and forth. This fits within the theme. Mark, do you still have interest in small caps here?
There's other areas I like more. They're tied to the same program. They're probably going to trade in the short term on the same program with, all of the others. At some point, I mean, a deeper retracement, I'm going to be interested in almost anything. I don't care if it's, I'm very much a buy the deep dip. I don't care if it's tech, if it's small caps. If I get a deep dip, I'm going to get really interested in that. And for me, a deep dip is down to the 20 weekly moving average with an upward, with stability. I mean, that's where I'm interested. Because once again, small caps are going to trade with this, this general theme. And you don't know when sell-offs end, when this kind of stuff gets going. But give me a pullback to the 20 weekly. I'm very, very interested in that. Kind of like you had in July, October. Notice how you came down, 20 weekly, had a nice bounce. That's what I'm looking for here.
Well, there's a couple ways that could happen, by the way. A chop for the next month as the 20 weekly catches up from a time correction could also do that as well. That's what happened in October. It really didn't come down that far off of that retracement, about 10%. We're already, 23.66 down to current price at 22.24. So we're off 150 points or something like that, 8% or so. It's got price action in here that we've got to continue to watch. Obviously, long-term trends are in there, but looking for an actual retracement with price confirmation is what we got to see there. Let's flash through the commodity market real quick here, Emily. And Marky, obviously, crude oil, is the one we got to start with. And the sell-off here has accelerated. Thursday's sell-off led into reprieve day on Friday and Monday as it was trying to battle back a little bit, but we are now taking it on the chin here again, down on the 50 period moving average, down over 4%. And what I'm gathering, Mark, is a lot of reopening restrictions in Europe and COVID concerns in Europe and then travel stuff going on that's affecting a lot of this. What's your read on crude's chart here in the news?
Germany is adding, and once again, COVID headlines are weighing on both the reopening companies here in the United States and on commodity markets right now. Germany is going into a hard lockdown, to add to other lockdowns that have been spreading through Europe. Headlines of third wave in Europe. Oil, which has been very resilient to COVID headlines over the last 4 months, because we've gotten like a variant headline here and oil sold off a little bit. It's the first time oil has sold off on COVID headlines. And, lockdowns for a month. I mean, it's not unexpected. The magnitude of the sell-off surprises me a little bit. And so I'm not saying worried right now because I'm looking to buy energy. But before I pull any triggers, not only do I have to see stabilizing patterns on the energy sector, and XLE's holding up okay today. I got to see these COVID headlines wear out and see what oil does in the next few days. I mean, XLE jumped up nice, right? They jumped up nice. Be nice if we can get some chop here for 4 or 5 sessions and then get a nice reentry program. But I mean, you're going to see these, and you started to see these COVID headlines here in the United States ramp up a lot more. CNBC, I noticed last week, talks about variants and lockdowns and this and that and cases going up. A lot of spook stuff. I'm sorry, I firmly am in the camp that the United States is on a trajectory for a full reopening. Vaccine distribution numbers, what are we up to? 2.5 million a day. The herd immunity graphs we've seen keep pointing towards a closer and closer date. Plus just resilience of Americans. Americans are tired of lockdowns. And I have some European friends that I've talked to, they're tired of lockdowns too, don't get me wrong.
Yeah.
They're very tired of it. And this lockdown was psychologically hard on everyone I know in Europe. It was just like, again. Now, they've had problems in Europe with vaccine distribution. They're a little bit behind other areas of the world. Some of that relates to AstraZeneca. That is getting ironed out. They'll get that distribution figured out. The distribution of vaccines is going extremely well here in the United States. And you're seeing some headlines on COVID saying, we're reopening too soon, this and that. Listen, I do not believe there's anything that can stop this train from reopening. And I'm betting accordingly with some of the positions I have. before I up that bet, up those trades, I need to see technical stability. So I have reopening plays, I have rotation plays. Before I up and add exposure to that, I need to see technical stability. And when it comes to crude oil, I need to see technical stability before I add to energy. I have energy exposure, and I just need to see some stability. Crude oil doesn't have to skyrocket from here. We've talked about that a lot in the last week. It doesn't have to skyrocket from here for energy to be a good play. All of this is going to iron out. I have real faith in that. But we need to see some technical stability on the charts, because once again, going back, I think timing is going to be really critical to maximize your profitability this year. I think us bulls, we're going to have a profitable year. Supplement it with cash flow here and there, but and as Tim said, I think there's going to be directional opportunities. We just have to be patient and let the chart play out before smashing that buy button.
And speaking of that, I mean, these are the first signs of a chart kind of stabilizing a little bit here. Mark, crude oil down 4.5% and energy flat. I mean, that is at least a 1 day kind of, hey, listen, maybe we can start to develop a bottom down here. It's not confirmed yet by any stretch of the imagination, but buying up the energy sector off the lows while crude is selling, in my opinion, is a good sign of relative strength for the sector. Now, it's not up. It's not like crude is up either, so we still have some of those concerns. But Emily, are you interested in the energy pullback? I mean, are you interested in some of these stocks, adding exposure, all that kind of stuff?
Well, I already have some exposure in energy. I got into ExxonMobil when it started to break out. And, like Mark said, it's really about planning and having strategy. I obviously, however much exposure I wanted to have in Exxon, I didn't just throw all my money in that. I'm kind of scaling into those positions. So, but just doing covered calls and stuff like that, and then looking for places where I can add on to those positions. So if you are already in energy, and I mean, my mindset when I entered this space wasn't going to be short term. It was going to be, it's a reopening play. So I'm planning on being in this for the next 9 months to a year. So I wasn't planning on getting out anytime soon. And my strategy was just to cash flow. So if that's the case, I have to keep that mindset, even when we have days like these where you feel like you should do something. But if you plan accordingly and you compartmentalize those trades and what you're specifically doing for them, I'm not going to be as concerned, when we have a day like we've had in energy. But I'm also going to look at ways to add more if that has been my plan. If it hasn't been my plan to add more to energy, then I'm just going to keep the positions I have and just keep cash flowing, because it's a reopening theme that I plan on being in for quite some time. So, and you just, like Mark said, you just, cash flow, find ways to bring down your costs and so on and so forth. But always have a plan before you go into any strategy, into any trade. Know what you're going to do if this or if that happens, so that you're not caught off guard when days like these happen.
No, and listen, we have a lot of experience in the reopening play. We've been playing. I mean, I've been playing it for a year. We pull up Jets again. We give me a 1 year chart of Jets. And when you get COVID headlines and all of the mess and then the pockets of euphoria, I mean, I've been playing movie theaters and cruise ships and airlines for the last year, even long before it became in vogue and, oh my goodness, we're getting close. And the one thing you learn when you're dealing with the amount of COVID headlines and reopening headlines, and we've gotten a bucket load, is that it really is a buy the dip, sell the rip atmosphere. When you look at Jets over the last year, you've had pockets where it's ripped, and then pulled back, and then it's ripped, and then it's pulled back, and then it's ripped and it's pulled back. And the reopening play, I mean, and during the last year, we've had a ton of headlines on COVID, a ton of headlines on reopening. And some of those have been really bullish and optimistic, and some of them have been bearish. And it creates this really wild price action. Not exactly a smooth trend. But if you're going to play the reopening, it really has been for the last year. I don't see it being any different until this all resolves itself. Is when it rips, take those profits. When it dips, look to buy. When it rips, take those profits. When it dips, look to buy or add. When I don't see why it's going to be any different than it has for the last year. Now, you don't know how deep the dip goes. You don't know how high the rip goes. Trying to time it to precision to the penny, you're not going to do that, give up that game. But the general philosophical principle on reopening has been pretty steady for a year. Sell the rips, take your profit. Don't be a rookie in that. And then when it dips, look for opportunity and then rinse and repeat that. That has treated me very well in the last year. As long as COVID headlines are here, I think that general philosophy has been a good one for last year. I don't see it changing.
Yeah, no, and I'm with you in all of those regards. And obviously the volatility here in this chart kind of tells you this is not a smooth operator from a candle swing trade perspective. This is a very choppy overlapping mess. So you kind of have to catch trends. You're going to have to play off the volatility, and probably there are better plays within individual airlines if and when you want to play them. By the way, the selling here in airlines today, Emily, comes after a lobbyist group. And we talked about this in the huddle today. Story number 2 in the huddle was talking about the airline industry lobbying President Biden to lift some of the restrictions, basically get digital vaccine passports available for people who are traveling internationally, kind of lift some of these international travel restrictions to Europe, the UK, Brazil, so on and so forth. They want a plan in place by May. And by the way, I do think they're going to continue to move forward on those issues. I don't think they're going to get a lot of pushback on some of that as we kind of reopen the economy. So Mark, I'm still interested in the airlines. I really am. It's just we've got volatility right now, and you've got to respect that volatility. Let's keep flashing through the broad markets here. I do want to get into stock talk shortly as well. Gold is next if we can, and pick up the GC contract. We like the developing price action, but it's still got to clear that pivot point. Marky, what are you reading in gold?
It's got to clear that pivot point. It's got to either clear the pivot point or find a level that is so low that you're comfortable buying it at some support level, some boomerang style trading. Gold's a terrible short-term trading instrument. It just is. At some point, it's a no-brainer down below. I don't know what level that I just am saying, I don't care anymore. What you do in between those things, a lot of people have existing gold. Cash flow has been the name of the game on gold. Adding new positions, though, you're in a little bit of a, you just got to clear that resistance level, or you have to have a much deeper pullback for adding new positions.
The queen has to own gold, right? I mean, this is the queen we're talking about here, the royal coffers. You hold it for long term, don't you, Emily?
Yeah, it's one of the positions where I don't even bother looking at it every single day because I don't need to, and I shouldn't have to, right? So yeah, I own gold. I'm going to be a long-term holder of gold until gold's no longer a thing, which I doubt it ever will be. So
not in our lifetime. Yeah, that's the good news. It's lasted 3,500
years. Unless my kids figure out
years.
something else different for me to invest in, gold's going to be the thing. That will be the thing that they will inherit from me. If I don't give them anything else, that will be gold. So.
Well, I'm with you as well. And obviously I do like, the potential developing price action over a little bit, but Marky, like you said, I don't think it's a swing trade vehicle. I mean, that's not the way you approach gold. That's not the way I approach gold in my own personal investing and whatnot. But where these levels are, whether it rips above 1750 and shows me strength or comes down in double bottoms, you just got to let the charts play themselves out. Got to let the charts work themselves out. I'm catching my breath here. Let's go on to Bitcoin next, and then the dollar. I want to talk a little bit about what's going on the hill here today. Marky, resilient price action out of the cryptocurrency markets for 6 months now, quite frankly, even in the face of some volatility. Holding the 20 here. What are you seeing in the chart?
It's just been choppy. Like Bitcoin is my largest position as far as things I trade, as far as total portfolio exposure. So I'm one of those people who might wake up at 2 a.m. to see what the price of Bitcoin is when I wake up. So definitely been following it. We for a nanosecond broke short-term support zone, have bounced back into that support zone real quick. I think you have to treat this as a broad range right now. You got a support level down at 45. You got a resistance level pretty clear at 60. I think you treat it as a broad range right now. And when you have consolidation patterns, you can get a lot of choppy action in a consolidation patterns. I started writing about consolidation patterns in this week's Commodities report for pro members. I bet you, Tim and Emily, I write about consolidation patterns for the next 8 weeks on how I approach them, how I trade them, how I look at them. I think you could be seeing a lot of consolidation patterns of different shapes and sizes in lots of areas of the market. And so I think you have to treat Bitcoin as a consolidation pattern until it gets that next umph. And we know umps on Bitcoin can be very, very powerful. So eventually a catalyst will come along. Until then, I think you have pretty good support down there at 45, and you have pretty good resistance at 60, and you treat it as a consolidation zone until you see otherwise.
You know, it may develop more into that. I do see a momentum change because the pivot point went from 30 to 60 the last, or 58 or whatever it was the last time, only came back to 45 and then ran. 45 is obviously clear support. You got the 50 period moving average there. But Mark, if this rips above 60, I mean, you've got higher highs, higher lows still in that chart. I think you got to respect the breakout on momentum if it does
I'm positioned
happen.
to the upside. It's just it's about adding a new exposure, right? You're so close, you know, and I've had a very clear rule for the last 4 months on Bitcoin. When I play off support and I add exposure and I play on breakouts, and in between I just cash flow the different instruments I do. But adding a support, playing breakouts, I mean, that's worked for 4 or 5 months. I don't see why that doesn't change. It's just, when does it break 60? And if you break 60 on a catalyst, you're going to have a nice little run there. So, but you're so close to resistance right now. It's like, you just don't add being that close to resistance. You wait for the break.
So the Queen loves gold. We know that. Does the Queen love Bitcoin? Shiny, digital, new age money.
I do love me some Bitcoin, but not as much as I love me some gold. But I do have exposure in both, and I treat Bitcoin the same way I treat gold. I'm a long-term holder of Bitcoin. So again, the daily choppiness does not bother me. I've been holding since 2017. So I held it through the crash, and now it's back up again. So I'm very happy with where Bitcoin is.
Hold. I see. By the way, that has been a strategy for Bitcoin players. Obviously, there's a lot new.
You two have been holding Bitcoin and going through some massive dips along the way. It is funny talking to traders that have not been through, like they just added in the last couple of weeks, and they see a red candle like yesterday.
Yeah, get ready.
Because they're inundated with, you know, Bitcoin could crash 90%, and people telling them it's the stupidest investment ever. Like, and so like when they get that first big red day, oh my gosh, the panic that they experience. Is this the end already? I've been, you know.
Oh, I remember being like that when I became an investor of Bitcoin. Tim and I used to talk about it all the time. Like, oh my God, did you see? I could not get off that Coinbase app to save my life because it was so fascinating to watch it. But now I get the alerts and I'm like, you know, it's like whatever.
My favorite tweet that I've read recently was somebody that reposted an old tweet by a person who's like, I'm so mad. I sold my Bitcoin at 30 cents. And it's now at $1, and I could have sold it now. And he was talking about like hundreds of Bitcoin.
Oh my God.
I should have waited, you know. Like.
Yeah. It is context though, right? I mean, how many of us as traders in a very similar light, if you've been around the markets, how many times have you heard a version of this story?
Oh my God. Well, here, I'll tell you my story. I had thousands of shares of Riot in December that I got called out on at like $4. You know, it was a nice profit, huge ROI. Yeah.
Listen,
what's that now? Like 45,
been there, done that.
$50?
It's like poker players talking about the one card that got pulled at the river at the end of the round 10 years ago. I get it. This is this is how traders chat. I mean, this is
just don't care because, like, listen, there's new opportunities always around. You know?
Fun stories, but you move on. That's exactly right. Exactly right. Speaking about moving on, let's go ahead and move on into stock talk here. By the way,
we talked about the dollar.
All right, fine. We
For
can
Cody's
look at
sake,
dollar.
Not that I care, but just
dollar did
like
pop
Cody.
here. And Mark, we do have a 2-day testimony happening with two of the most powerful, people in financial markets right now. Secretary Treasury Janet Yellen is going to be speaking, your girlfriend, to Congress here today. And Jerome Powell is also speaking. They're going to speak today to the House and tomorrow to the Senate, to the banking committees there, I believe, and basically expected to reiterate exactly what you would think. Low interest rate policy, the economy's recovering, we're going to stay soft. They even put their prepared statements and released them out to the public in advance last night, read through them. It's chalk, Mark. I don't see much coming out of these events, but what about you? I mean, anytime the Fed chair does start to give testimony, it can be a market
It's
mover.
always the questions, right? Because
Mhm.
they have their prepared testimony. It's always the questions that can trigger something. So if somebody asks the right question, that but Jerome Powell and Janet Yellen have become pros at this, right? So usually these things much ado about nothing. I mean, we already know the storyline, so it's just a matter, does the right question get asked, that an algo pick up, that the market spooks the market? Probably nothing to see here. I mean, I'm tired of both of them. I could go a while. I mean, because they're just going to say the same stuff over and over and over. Inflation is transitory. We have tools to tackle it if it does.
Mhm.
What are those tools besides raising rates? That's what that's the question I would ask. All right, so you have tools. What do you have outside of raising rates to handle inflation?
Various, degrees of tools that we
No,
can
but
use in the
what
back.
outside? Can you name
We've got a
one
big
outside
toolbox.
of raising rates that you have to combat inflation?
Well, we don't like to ascribe to specific policy.
Yeah, that's what I
tell,
thought. You're so
you know,
full of crap, both of you. So they're not gonna say anything new. We know the storylines. How fast does inflation run? How fast does the 10-year run? One of the I can't remember who it was. Let me pull it up. The Fed person, Kaplan, predicted a rate hike next year.
I saw that. Yep.
And
He
so,
must have
like,
been one of those dot plotters. So
so
I got to tell
some
you guys a
members of the
story.
Fed say, hey, we're raising rates as soon as next year. And once again, the areas, there are certain areas of the market in which are not, I mean, some tech stocks, some of those high flyers, they're not going to recover to their highs for years. I really believe that. Wake me up when Peloton hits an all-time high again. I might be, retired at that point. Apple, the big cap growth, at some point, the market is going to say these companies are great, even if interest rates go up. I'm very interested to see the divergence there in the big caps.
Mm-hmm. A couple of things. Number one, you mentioned Kaplan, and obviously he was a portion of one of those Fed governors who was on the dot plot for 2022. He came out and confirmed it here with his interview with CNBC today, talking about raising interest rates in 2022. And a lot of people, a lot of economists, that's what they're asking last week. That's where the mixed messaging was from the Fed last week. If the economy is going to recover so well, of course you're going to have to at some point do something about it. It is one of their tools. You mentioned dot plot, though. I thought it was funny. Yesterday, I heard my wife working with our daughters in their school, Emily, and they were learning about dot plots. And
Really?
Matt and I are here working at the house. He's visiting me this week, and we hear dot plot, and both of us from like 50 yards away. Dot plot? What about
That's
dot
funny.
plots? Pulled us in. We had to figure out what kind of dot plot education my kids
Are they
were going
being
through.
taught?
It had nothing to do with the Fed. I'll tell you that. It was just a concept in their mathematics, but it was one of those moments where it kind of pulled in dad's work, like bring your dad to work day.
Yeah, it's a little bit of excitement, and then you're like, oh, it's nothing.
Yeah. Oh no, we could bore you for an hour, but go on. Sorry to interfere. Let's get into stock talk next. And by the way, if you're out there and you're watching the show right now, we really appreciate you guys. Hashtag Team Tackle as always. Whenever you pop in for the first time, if you're brand new watcher.
Before we get into stock talk, I just headline came across. SEC acknowledged a Bitcoin ETF proposal from Van Eck. Saw one from Wisdom Tree. Van Eck is now trying to get a Bitcoin ETF. It's just a matter of time. There's your potential bullish catalyst. ETF gets approved on Bitcoin. Yeah,
I think it's going to happen. They're going to capitulate. They've been fighting. We wrote about that in the huddle about it a few weeks ago when the Wisdom Tree one came up. Van Eck, obviously another big issuer of ETFs out there in the marketplace. They're all going to have their Bitcoin ETF proposal market at some point.
I mean that's a potential bullish catalyst on the horizon.
Sure. All right, let's move into stock talk here today. And let's start with Viacom, VIAC, very hot communication sector. So many of these streaming service type of companies, Paramount Plus, they think they're going to have 75 million subscribers. And Emily, look at that chart. It has gone from 30 to 100 since the beginning of the year.
I have a
Well,
funny story about Viacom, if you
I'd
don't
love to
mind me
hear it.
sharing, only because, and you know, Facebook is good for one thing. It's good for those reminders when you post stuff from like a couple of years back and it reminds you. So yesterday was what, March 22nd. So apparently 3 years ago, 2017, we had a snowstorm and my kids were home from school. So they didn't go to school. This is when they actually used to go to school. And they were home from school. They had a snow day. And I spent the day with my son building a watch list for him. And Tim, you'll remember this. We did a YouTube video about it, right?
Jason, yeah.
And one of the things that one of the watch lists, one of the shows that he likes to watch on TV back in the day was SpongeBob, which used to come on, it still comes on Nickelodeon. So we did a little bit of research and we found out that Nickelodeon was owned by Viacom. So we went in and I had him click the buttons and he bought 100 shares of Viacom back in 2018. So
what was the price again?
I believe the price was probably, and we can go back and look at it, but that reminder was so cool. I just thought it was so fascinating to just kind of go back and see that. But 2018 in March, Viacom was sitting at about $50. It dipped all the way down to 10, during the pandemic, but we held it through and voila, here we go. So he's a very happy kid.
That I remember that video that you did. I thought it was a wonderful, example of how you can teach kids how stock markets work. Doing a simple exercise like building a watch list with your kids of companies that they already participate with, that they use their services. Like Mark, we could sit our daughters down and say, hey, listen, Roblox is a public company. Take a look at this chart, or whatever it might be, or these streaming services. Disney Plus is a public company and you love Disney. So yeah, it's a really cool way to teach kids, Emily. I remember that.
Yeah, unfortunately, that was on paper money. I wish I actually had bought Viacom, but I did not mess around with Roblox. I actually made him buy shares of Roblox for himself. So he does own 2 shares of Roblox.
He's got a couple, start that Roblox investment there. I think it's really, really cool.
Yeah.
All right, some more stock talk here. Viacom, by the way, they're offering $3 billion because, Emily, they're taking advantage of the increase in price. They've run extremely here this year. Over the last 6 months, I think they're up over 230% alone. And Mark, they've got to fund all these contracts they're signing. They signed a contract last week with the NFL, $2 billion a year for their broadcasting rights. They want to expand Paramount Plus. It makes sense. I know a lot of companies have been doing this, Mark, and quite frankly, the one-day sell-off in many of these stocks when they do these share offerings usually gets bought up. So it's interesting here. Mark, how do you read that chart outside of just extreme momentum right now?
That's it. The runs probably ran out. You're seeing a different volatility pattern over the last 6-7 trading sessions. Probably for me on a deep pullback watch list. But it's been a heck of a run. It shows you that when you catch a breakout or a run after a reversal, which is why I'm always looking for reversals. I'm mad I missed this. In fact, we were talking about this yesterday, Tim. I was like, I'm upset I missed the Viacom reversal. My attention was in other places. But when you get those reversals like that breakout you had the start of the year, you traded sideways, low volatility, you break out. It just shows you how every once in a while you just have those big, massive runs.
Mm-hmm.
After the run, you try to chase it here. Not for me, but it's why I love reversals. It's why I love reversal candidates. And I still think there's some good ones out there.
Mm-hmm.
But yeah, it's a nice run.
Next, let's move on to Microsoft if we can. And guys, if you're out there and you're watching the show and you've never heard of a company called Discord, you want to put those guys on your watch list when they finally do something with their stock, whether it's through this acquisition potential with Microsoft or maybe even an IPO. Microsoft is in talks to buy this company. Emily, it's a private firm. You know what Discord is. You can get online, you can play games, you can get with your friends.
Where we hang out when we're playing Among Us.
That's exactly right. I use Discord all the time because I play a lot of online games with my family and my friends, especially the more that you work from home and all that kind of stuff. Wonderful way to connect. And we know what the gaming sector has done in the last year, Activision and EA and all of those stocks. I know they're off in the last month, but they had incredible runs. Microsoft wants to buy Discord, Mark, as they expand their gaming suite, their gaming offerings. $10 billion is the price tag that is rumored to be talking about. And I'll give you a number here, Mark. There's 100 million monthly active users on Discord.
Wow.
I think this acquisition could be monetized and would be very, very smart. The only thing we do not know at this point is if Discord actually wants to sell. Discord was the one who went to Microsoft initially. Now these rumors are starting to pop into headlines. There's some smoke here. I don't know if there's fire here because there's still rumors they may IPO directly. Mark, any interest in this, kind of storyline with Discord?
Well, I mean, it just, whether it's Discord or not, because I think I don't have anything to add. Your analysis is spot on. But it just, like, these companies like Microsoft, they're going to make acquisitions over the next 20 years. They're going to grow. Microsoft's a juggernaut. They will add, whether it's Discord, they're going to add something sweet every few years. They're just a juggernaut. And so it's just one of those companies that if you hold it, it's just a matter of how you're managing it. And if you don't hold it, then it's just when do you look to time your acquisition of it? How do you sell covered calls in the mids, maybe low? It's just all about management. Long-term Microsoft, probably we're looking 15 years and it's doubled in price. It's just a juggernaut. It's just managing it in between now and the eventual awesomeness that occurs 10, 15, 20, 25 years in the future.
Mm-hmm. Very good. All right, a couple more stories.
And new investors can say, I want to double my stock today, this week.
Sure.
That's nice. Listen, that's what trading's for. Microsoft's just one of those long-term position holdings, though.
Yeah, they've been smart, though.
Not everything has to be exciting a mile a minute, right?
It does not have to be, but I will remind my queen here that this was one of my picks from last week's Queen's Court. This was the choice I made. Still looking good.
And you survived,
Looking good. We're going to play around with that here in just a few minutes.
That hasn't broke the monthly Janet in how many years?
Oh, God.
The monthly
Never.
Janet. I don't know what world I live in sometimes.
Maybe back in 18 at the end of this Texas. Listen.
Slightly.
If you don't own Microsoft, the next time we have a massive market sell-off, like we did with COVID, like we did in 2018 at the end of 2018, next time you have that massive, add Microsoft.
It's incredible.
It's been a juggernaut.
Microsoft.
I'm still trying to figure out how monthly Janet has become lexicon in my my daily weekly conversations. But it is a thing there. It has been a juggernaut trend for quite some time. 1A in the market, in my opinion. All right, back on a couple more if we can here. Got a couple upgrade downgrades as well. Mark, you mentioned Peloton. Well, Peloton actually did 3 little small acquisitions. The company not necessarily want to just be one of those MPTON. Although Pipeline Technologies might get better analysis from Mark. I know he hates Peloton. Not better, but more bullish.
I don't hate Peloton. I just hate the price.
That's fair. That's fair. And it is extreme. And we're down here, but we are near this long-term 200 period moving average, little reversal. Mark, they bought an artificial intelligence company, a wearables, company, and a hardware company. Obviously, the company has plans not just to be those, equipment makers of bicycles alone. Any read here on Peloton? Emily, do you have any interest in this stock?
Not really. No, I don't. Not one of the things that I trade. I did, swing trade it back, during the whole, stay at home plays, but I'm not a long-term holder of Peloton. I did take advantage of the movements back in these areas here, but no, not at these levels here.
Yeah, I haven't traded it in a long time.
I haven't touched it in quite.
It's just a wonky pattern. I mean, I just haven't liked the price action, the development. I don't believe in the fundamental valuation. I mean, we did a podcast with Coach Greg about the true nature of fundamentals yesterday. Peloton would not be one of old money's picks. I can tell you that, Marky. He would not necessarily want to go for the PE ratios.
Does it even pay dividends? I know it's like you can't even talk about it if it doesn't pay dividends with old money.
This is a high momentum spec play for sure. In fact, I'm going to do it. PE ratio 218.
Good Lord.
218. Is that?
Yeah, this would be an off with his head if anybody was to present this to the Queen's Court.
Once again, like higher PE ratios, they can be relative, but man, I got to see something that's like game changing, technologically innovative, a disruptor like Kathy Wood before I'm going to chase something like that. I just don't see it. you know, in Peloton. Now, maybe they purchase something, right? Maybe they go through acquisitions, and yeah, I've never seen it.
Yeah.
I've never seen it.
Well, let's see if you agree with some of these analyst upgrade downgrades today. Moving off of Peloton, let's start and we'll go just kind of rapid fire through both of you guys here. I got a couple of them. Marquis, Southwest Airlines, LUV, got an upgrade to buy from hold from August. Do you agree? You think Southwest specifically in the airlines is a buy?
Yes, I do. I think once again, I am betting, and I think that we are going to get a full economic rebound. I believe GDP is going to be robust. I believe, and these are all beliefs, right? Things can change on beliefs. These aren't facts. I believe that you are going to see a spending frenzy of pent-up demand like this country has never seen. People are tired of lockdowns. People are tired of living not the life they want, and they're going to have plenty of money to do it in this robust economy. I think eventually this, whatever's going on in the algos last week, eventually you get a nice entry point. I think Southwest is much higher at the end of the year. Don't love it as a long-term investment. Love it as a position trade. Agree with the upgrade.
Mm-hmm. Same firm, different stock, different industry here. Netflix, Emily, Argus upgraded Netflix to buy from hold. This stock has been in long-term consolidation. I'm talking about for most of the year since last July, chopping back and forth. Had a wonderful earnings report last quarter. I remember Coach Matt kind of detailing some of the numbers. Looked like we were going to take off there for a bit. Obviously faded back into the range. Caught up with the 200 period moving average, Emily, after this long consolidation. Do you agree, Em? Buy on Netflix?
It's a buy for me. You know how much I love my Netflix. So yeah, I definitely love it. I like that it held the 200-day here, starting to bounce off of that, clearing all those moving averages here. So yeah, it's a buy for me. Watch out for earnings. Are we back in earnings season again? We just finished earnings season. It feels like we're just getting back into it again. But
About a month away.
yeah, it's a buy for me. I agree.
Earnings are like Groundhog Day, the movie, Emily. It's always another
I
earnings
promise
season.
you, it's like, you know, you just clear it and then you start looking ahead of time and you're like, that little thing again. Ay, ay, ay.
Yeah, that's exactly right. That's exactly right. It's always coming up, knocking on the door, going to come down the pike here next, and earnings in about a month. So, but this is more of a longer term upgrade. Obviously, they're talking about long-term fundamentals, whatnot. It's an interesting spot. If you look at the weekly chart real quick here, Em, you know, there's many of these companies that have taken quite a bit of time off, Mark. Some of the big names in the market that for years were leaders in the marketplace, and they're still up here near all-time highs, but they've been consolidating for a bit, catching up to long-term moving averages, catching up to short-term moving averages, you name it. It's interesting. It's an interesting spot. It's not out of a range. It's not broken out. It's not a clear technical pattern in that regard, but I do like it as a buy myself long-term as well. All right, let's do one more. Let's do maybe two more. Sunrun, SUN next here. Mark, obviously solar was hot, then it was not in the short term, but there's a lot of anticipation around this sector. And what is Sunrun? Is it
Run?
Run, not SUN? Yeah, RUN. That's right. Mark, Goldman Sachs, one of the best firms on the street, making these calls, upgraded Sunrun to a buy. You know, after a couple months taking it off, that's an ugly chart. You cannot argue with that. Even down here near the 200, we got lower pivot low, lower pivot high. Now we're in consolidation, choppy nature in the pivots, the last couple of them, as this trend's been developing for about 3 months. Do you agree, Mark? Sunrun as a buy.
I like hot trends that take a little time off. Solar was hot there for a while. You know, and this is one of those things. The next time you are questioning rolling your call up at a loss, just remember trends can reverse very quickly. We had that I had a lot of questions on SPWR and other. When they go up quickly, they can come down quickly, is basically my point. Yeah, I like solar. I think it's been beaten up. I don't think the run's over. It's finding entry point. It's finding your entry point is basically. Naked puts on Sunrun down low look attractive to me as possible entry points. For directional trades, it's a little choppy right now. You know, we got some weekly moving averages hiding over us. I love it as a cash flow, but I think I don't think we've seen solar's last run this year.
Mm-hmm.
So I agree.
I agree. I actually, we are in a Democratic administration who's going to have pro-solar policies at some
I
point.
mean,
I
what
think,
happens in that infrastructure bill? Because
yeah.
from a thematic standpoint, I always like to think, what's the next catalyst? Little fun little game. What happens in that next infrastructure bill when there is 400 billion for clean energy, something like that, right? Boom, solar takes off and runs. I'm not afraid to bet ahead of that time. And then when you look at that weekly, when it came down there to the 50 there, I saw to the penny bounces. That lets me know that there wasn't an ounce of real fear. Algos sold it down, bought it on the penny. So love it for a cash flow, but when that catalyst occurs, solar is going to have a really good 6-week stretch.
The only thing I'd push back on Goldman, and obviously they're not looking at the technicals alone here. They're considering fundamentals, themes, all that kind of stuff, maybe even the infrastructure concept there, Mark. The chart's ugly still until we get clarity in the short term. So even if you got a long-term buy rating on it, if I'm looking at this one, because, I'd be approaching these from a position style type trade and whatnot. I need that thing to clear out a little bit, for me. I need it to develop. The pivots are messy. What are you seeing in that chart right there?
Same analysis as you guys. I definitely think solar is a space that I've been interested in. I've got friends that are in this industry and they've been talking about how it's just been, it's a lot of people are getting into that and people are putting solar panels in their homes, and it's just a good space to be in. So I'm certainly interested in it, not at these levels here, but yeah, for sure. As a long-term play, I like it. Just got to find a clear entry. It's got to clear those moving averages, like Mark said, on the weekly. But definitely a space that I'm interested in. Not Sunrun, but maybe some other ones.
Mm-hmm. Mm-hmm.
Yeah, it doesn't necessarily have to be Sunrun. You can like SPWRs out there. There's a lot of solar companies you can play. I see that infrastructure bill and just the headlines of money allocated towards this space. I know how algos respond to those. It's going to be a really big stretch.
Yep. Take your pick, I think, within the industry, obviously. All right, last one here, GameStop, GME. I just want to point something out here, guys. Get your popcorn ready. About 4 o'clock Eastern time, Mark, we have an earnings report from a company who has captured the attention of the market. I don't have any trades. I don't have any positions. I don't hold this. I don't use this. I'm not diamond hands. I guess I'm the old boomer type of Tim here, Emily. But I am interested just in the volatility potential from tonight's earnings. Do you think it's going to be something or nothing, Mark? Do you think we're actually going to get some juice out of this thing?
I have no idea. I know, like, I've been waiting for that big, huge sell-off day to sell naked puts at lower levels for a while. I haven't got it. And I've really been waiting for back-to-back. I'm hoping for a big sell-off just so I can do greedily, but I have zero idea. I don't know. I do not know how the sentiment battle. It could be a wash. Could go either way. I am absolutely 100% going to be following the price action, though.
Wouldn't it be poetic, though, if GameStop did nothing?
It could be a wash. It really could.
Can you imagine just having your time frame set up to 5 minutes and you're just seeing nothing?
You're like, really?
Like, really? I got popcorn and wine and cheese and the crackers and I'm getting nothing.
I'm going to be watching one way or the other just for the entertainment value alone. Obviously, anybody who doesn't know that GameStop's caught the attention of the market, hasn't been paying attention the last couple of months. The number one meme stock out there. They've held committee meetings in Congress about it. It's going to be interesting. First earnings report since all the madness happened. And they're not expected to make a lot of money, guys, but I don't know if that matters much for this company right now. We'll see how it comes out. All right. No more delay here. It is time, my queen. This is your court. Explain the segment, set it up. And I know Mark and I, we're hoping to keep our heads today so that we are bringing our best analysis and our best pick for you. Queen, go ahead.
Oh, well, your odds were better when Matt was here. Now it's just 50-50. One of you might get chopped, both of you might survive. I don't know. We'll see. But the Queen's Court is a new game that we are playing here on the halftime report, where the gentlemen will bring me their picks and they will try to pitch me on it, whether it's a short-term trade, long-term investments, and I get to decide whether their heads get chopped off or if they survive the Queen's Court.
Okay, Mark, do you choose to approach the Queen first?
Listen,
or would you
I've lived a
rather-
good life. I have. I'm not afraid to die. All right. Now, the stock I have for you is one of my favorite, perhaps my favorite fun stock I have. Now, you think I trade a lot of trash. It's just true. I like the high volatility world, which is why I'm so interested in GameStop. But my little favorite company is going to be highlighted on Jim Cramer's Mad Money tonight. So if you want to learn more about this company, watch Mad Money tonight on Jim Cramer. That is the first and last time I'll probably ever say that, but he is highlighting my favorite stock. Cathie Wood is the largest shareholder in this company. So, hey, Tesla, she's a big shareholder. Cathie Wood, of fame, Cathie Wood, biggest shareholder in this company. Look at the look on Emily's face. She is so just not pleased right now with, so let's bring up my fishies. Aqua Bounty, AQB, my favorite company in all of the things.
AQ what?
AQB.
It's not Fish Friday. So.
AQB. All right. Now, Aqua Bounty,
Who are they?
Who are they? You see, this is why if you have desire to know more about this company. Now, they are a biotechnology company based in Massachusetts. They what they do is they research and they develop genetically modified salmon. Now, its goal as a company is to create products to increase the productivity of aquaculture. Aquaculture, increase your vocabulary. This is one of those disruption type plays. Cathie Wood, once again, huge, not just huge, the biggest shareholder. It is a fun company. I like companies, once it's a high volatility company, so it fits my cash flow parameters of stuff I like to trade. But I like companies that can disrupt and have a unique theme. A company whose theme can pick up steam, if you will, and build upon momentum and something different out there. There's nothing like this. This is a pure pay, genetically modified salmon fishing company. Technically a biotech company. Love its disruptive nature. I also like the little resistance level that's formed at 8. So we've had a big, huge sell-off throughout the year after a nice little run. It's got caught up in the GameStop volatility. We had a clean bounce off the 200 to the penny. Loved that, added exposure when that happened. And I like the reversal characteristic. So not only do I like the company, not only do I like the theme, not only do I like Cathie Wood's support, and Jim Cramer highlighting it is certainly going to increase interest in my little fishy company. But I like that little resistance level that's formed at 8. And I like the amount of clear air. We don't really have any, we have a few things that could act as old resistance, new support, but we got a clean amount of clear air from a technical point of view above 8. So love the theme, love the company. It happens to be my favorite. Whenever the market's having a hard day, I say, fight, fishy, fight. And they're my rallying cry for my whole portfolio. Aqua Bounty, Queen. Can I interest you on a breakout based on Cathie Wood being the shareholder above 8?
For a swing trade?
Well, you can do whatever you want. You're the queen. I got diamond hands on my fishy, so.
I'm trying, Mark. I'm really trying.
I mean, you clear that 8. You clear that 8.
I'm trying to find a reason to love this space of yours, and every time
well,
let Tim
do his thing, and then you can dwell on it.
Let me see what Tim
You're the
has.
queen. You take as
Let me
much
see
time
what
as you
Tim
want.
has to bring. Yeah, let me see what Tim has to offer.
as the guards
Since
grab
it's just
Mark
the
and
two of
hold
you
him
guys.
by the collar. Yeah, now
Yes.
I get to come up in front of the queen, and she's still not been fed yet, because obviously she did not want salmon for lunch. She's still deciding. She's still deciding. So let me tell you what I got here. Mark, you talked about disruptive innovation. Well, I'll tell you a company who's been doing it for about 25 years. Bring up Amazon if we can. Now, last week I stayed with the cream.
Hold
of
on,
the
guards,
crop.
just go kill off Mark right now. He's dead. Go ahead, Tim. Go chop off Mark while you talk to me. Make him fish. Put him among the fish and let him get eaten by the GMO fish.
I gotta tell the queen a little anecdotal story. One of my favorite things that my wife spends time on is TikTok. She loves TikTok, getting all those little videos. Somebody put a video of TikTok on TikTok about Amazon and stock market analysts talking about Amazon in 1998. It was so interesting, the old grainy video footage. And basically the guy who was the reporter was asking the Wall Street analyst, well, here's a bookstore company that critics say if they sell every book in the history of existence, they still don't justify their market cap. What are we doing here? And the analyst is like, listen, what you have to understand is it's not a bookstore company, and Wall Street is buying on future earnings and all of these kind of things. And he was right. And Amazon won this fight over the years. 22 years later, they're doing $400 billion in annual revenue. This is a company in the last year, and they caught a little bit of a downward sell-off there, getting caught up in tech, but also Jeff Bezos announcing his future retirement, I think kind of put a little bit of the wind out of the sails in the short term. That doesn't affect the juggernaut of what is Amazon, who will win the future, wars between whatever other company is coming up. I know Mark says Disney versus Amazon in 2333 or whatever the date is.
2332.
Yep. Amazon will be there. Pull this back to a weekly chart, because the queen cannot be bothered with short-term volatility analysis, day-by-day price fluctuations. The queen wants to know, am I getting premium? Am I getting the great royal, treatment here from this company that I'm going to be investing in? A year-long consolidation, strong support, caught up with the 200 weekly period moving average. It's coming off the 200 daily moving average. Yes, Amazon is my gift. I hope that you accept. I like it even on the short term. If the queen is just looking for a little pop trade, go back to the daily for a minute, because there's a nice little technical level here. We're not just buying it on the dip. 3,200 has a little trigger developing coming off of that downward kind of pattern. If you connected those highs on the downtrend, in fact, draw me a line if you can, Queen. Grab the top of the candle up there on the right after earnings, and draw
where are we?
And draw a line, just connecting everything. You'll notice if we catch this breakout, we're clearing the downtrend, we're beating that up. We're clearing horizontal resistance, and we're coming off strong long-term levels. My queen, that's all I've got for you. Just maybe can I keep my head?
You don't have to beg and plead for this. You will keep your head. First of all, you know how much I love my Amazon. I love the reversal pattern. You can almost see a head and shoulder, reversal head and shoulder kind of forming here, breaking that right shoulder here. So I definitely like it, even for a short-term trend. But you really sold me on that weekly. And if you notice how Amazon, when it has this consolidation, and it's done this oftentimes, right? And the place you could do when Amazon is sitting side is giving you this consolidation. I love it for ion counters, and it gives you this nice consolidation times here. But when it does break out, it tends to move, and it moves a lot. So short term, long term, I'm sold. You get to live. Your brother, on the other hand,
that makes me happy. All right.
I think.
So I
Do
survived.
they raise genetically modified salmon? Is my question.
God, I hope not.
By the way,
I hope not.
They might. They have so many little.
What is it that they don't do, right? Exactly.
Right? It's possible they might actually. So now, all right. So I survive. Let's go back to is it AQB?
AQB.
My queen, the gallery is eagerly waiting your decision here. In fact, Jonathan, I got to point something out interesting from the chat here today. Earlier, Mark, even before you brought up the symbol, Jonathan even preempted this and said, Mark, just remember, fishies fight.
Fishies
Whatever
fight.
happened.
Fishies are the mascot. The salmon is the mascot for the entire underbelly.
I do like this on a weekly. If it does break that 8, it's got a nice run up, to that 12 range. So
Fishy.
Oh, okay. I will give this a try, only because it's lunchtime. I'm hungry. It's Women's Month. Kathy Wood is a well-respected lady in
Don't
the
trust me.
financial
Trust
world.
Kathy Wood.
So I cannot go against my lady there in Kathy Wood. So I will give it a try, but it's not a very convincing yes. I'm just saying yes, just so I don't chop.
I'm just happy to live. Are you kidding? It's all relative. It's a
but
nice
it's not
victory for me.
convincing. It's not convincing, but you will survive. I don't feel like taking any lives today.
Throw Mark in the dungeon for a day for his insolence. The Kathy Wood angle got you over there, Marky. Well played, as always. I got to tell you guys, it's a fun segment. I enjoy it quite a bit. Obviously, on Tuesdays, Emily comes and join us. We're going to try this each and every week, where we got to bring our picks to the queen and see what she thinks about them. Emily, a couple of them passed right now, so at least we get to keep our heads for one more week.
Yes,
fantastic. All right, guys, let's start wrapping up the show. Let's move into final thoughts here. Marky, I'm going to give you the first word. What are you seeing in the market? Last messaging for the team out there.
Listen, I got more red than green on my personal board. I mean, it's a choppy, messy market. It doesn't surprise me at all. When we talked about it on the Sunday prep class, it just felt like this is going to be a choppy market. And every area is going to have their day. Like tech is going to have good stretches. Reopening is going to have good stretches. Energy is going to have good stretches. Value is going to have good stretches. And just like last summer, and I really think timing is going to be important. And of course, it goes without saying, don't be over leveraged, because we don't know how the market will react if rates just take off up out of nowhere. So just don't be over leveraged. But I really think timing and not being greedy, buying dips, especially deeper dips in each of the area. Like deeper dip in tech a few weeks ago, deeper dips that might occur in some reopening plays, buying those deeper dips, especially on technical reversals, selling the rips. I think there's going to be a lot of rinse and repeat of that in the next 6 to 9 months. If a choppy market can be amazing, but it requires buying deeper dips, selling rips, rinsing and repeating that process. And while there might not be those home run plays all over the place, like Viacom, right? You're still going to have some good opportunities. Just patience and discipline and turn back the greed. I think you could look back at 2021 and it'd be a very successful year, but you got to be patient and disciplined in this market.
Mm-hmm. Emily, final thoughts from you.
Same as Mark. Obviously, take caution, plan accordingly, find those setups. If you're short-term trading, make sure that you have your rules in place. If you've got to tighten up on those stop losses to just make sure that you don't get caught up in the, in the volatility, do so. Position sizing, cash flow. It's just business as usual, but with a little bit of caution. Obviously, the momentum has slowed down over the last few weeks, so just keep an eye on those levels. Keep an eye on the volume, as on the down days versus the up days, and just plan accordingly and trade accordingly. Keep it simple.
I'm with you. I'm with you. Keep it very, very simple, and just execute your systems. It's always a good reminder to everybody out there. A couple of days of testimony from some, important bankers up there, on the Hill in Congress, not necessarily driving markets here today. What will be most interesting is to watch whether this theme is going to continue here, Mark, with the yields, the tech, all of the rotation stuff. That's all seems to be correlated. But my final thoughts are pretty simple. I'm going to, get the word out here for tackle trading. Number one, we are producing and releasing the Huddle podcast. Find it on tackletrading.com each and every day, like we talked about earlier. Excuse me, it goes at 11:30 a.m. Eastern. So just after the bell, just after the markets open, after a couple hours, we're putting out the most important stories of the day, giving you context as to what is happening. Hopefully you guys find a lot of value in it just before the halftime report here, actually. And it's a great one to get on the go. So find that on tackletrading.com. Number two, we did release another episode of our Trading Justice podcast that we put out each and every Monday. If you've not got a chance to listen to that yet, went out last night. Coach Greg, Old Money Holmes, he had some wisdom that he imparted regarding specifically the true fundamentals of investing. He wrote a newsletter recently for Trading Justice on that topic, how he looks at dividends, cash flows, profit margins, PE ratios, a lot of the different tools he's using in fundamental analysis. Greg and I sat down and we had a conversation about that. So if you've not had a chance to do it yet, listen to the Trading Justice podcast, might get a few tips on fundamentals and how you can use them in your own investing as well. All right, guys, we are done here for today. If you've not done it yet, click subscribe, come back and join us. We're pretty cool. We like to have a lot of fun, break the markets down on a daily basis, giving you guys analysis and insight that can help you better run your daily routine. We'll be back tomorrow. Pro members, we got the coaches show tonight. If you're a new pro member, you can catch the onboarding recording from last night right here on the YouTube channel. And I think that's it.